Good morning and welcome to my daily market report. My name is Mike and my market report is on mortgage rates. If you're looking to keep an eye on what mortgage rates are doing on a daily basis, you've come to a great video. We do these on a daily basis. We get into what's impacting mortgage rates, if they're going up or down, if they're going unchanged, whether it could be something on the economic calendar that popped up, or it could be something uh, headline news that could pop up, or geopolitical, or sometimes the sentiment changes in the markets, whereas good news is bad news, and vice versa. And a lot of people who aren't familiar with or don't follow have no idea why this is going the way it's going. So we're here to kind of try to explain some of these items to you to help you guys out. If you're looking to refinance or purchase, that's probably why you're looking at rates. And this gives hopefully some insight as to whether to lock sooner or later or hold off, and give you some hopefully some background information so you can hopefully make an educated decision for yourself coming in. So without further ado, why don't we jump? Let me also touch that a little bit about myself, so you can at least know who I am. I am a loan officer. I do work with a national lender, so we can do loans in all 50 states. I'm here to answer any questions if you got anything regards to mortgage related, like any programs out there, mortgage rates, the process, or anything along that line. So if you got questions, please feel free to reach out to us. We'd love to be able to answer you guys. Again, we would also love to earn your business. So if you guys are looking to refinance or purchase, please reach out as well. See if we can explain why it may make sense for you guys to come and use us. So now, without further ado, we'll start with the economic calendar. We don't so much get into this, but as we can see, every week, every Wednesday, the mortgage-backed securities, or not, I'm sorry, Mortgage Bankers Association comes out with a mortgage application activity report. And as we can see here, purchase applications went up, as well as refinances went up. So we did see some improvement over the past week or so on mortgage rates. So more people refinance opportunities came in at that point. Now, the big one today is a consumer price index, which is inflation on the consumer side, or CPI report. So the headline number for month over month for the month of October, it went from September of 0.4% growth and forecast of 0.6%, and it came in a whopping 0.9%. Now, we also got the core CPI on its annual. This one's showing just the annual. It went from 4% with a forecast of 4.3, and spiked all the way up to 4.6%. So this is a big jump, the highest we've seen in like 30 years. This is obviously not good news, as we are seeing prices going up. Even though the price of oil doesn't get included with the inflation data, the core, it does weigh on the overall economy, because as truckers, for example, their costs go up, that gets passed on to the people they send products to, and then of course retailers and everybody else, and that ultimately ends up to the consumer. So in essence, yes, consumers do pay for it at some point, especially if it persists. And this is something that we are facing right now with high inflation right now. And this is also talk about the Fed probably will they're going to monitor this closely, and this could move up the calendar for them to start hiking rates. So it looks like it could be right around July of next year is what they're discussing. Now, every Thursday we get the jobless claims, and because tomorrow is a holiday, the Veterans Day, the markets will be closed, so there won't be any report tomorrow. They moved up the jobless claims to today. So last week's claims initially came out at 269,000. However, that got revised slightly higher to 271,000. Forecast would come for 265,000 this week, and it came out at 267,000. Now, we also got wholesale inventories. So back in August, it went up 1.1%. Forecast was supposed to be that same pace at 1.1, and it did have a slight uptick to 1.4%. And let's see, and we do got 30-year bond auction going on later today, so that could have a little bit of an impact on the markets. But the big impact will be obviously what's going on with the inflation data. And as you can see, markets are hating it. Stocks are also taking a pretty big beating as a result. And right now we're down about 47 basis points. So we started off not only lower from where we were end up yesterday, but now we're way down and now below the 25-day moving average and collapsing. So this has been consistently moving further down, sliding down the pole here. And this is almost a half a point difference. So that no point loan yesterday could probably be pretty close to about a half a point today as a result here. due to pricing and inflation. So, if you're not aware, inflation is the biggest enemy to bonds, which is what drives mortgage rates because these are bonds. And basically, what that means is that inflation, because when costs go up, it erodes the value of a bond over time, and that's why it's the biggest enemy. So, typically, to fight off inflation, they will typically raise rates as a result of that to slow it down. It's just growing too fast and too much too fast, and that's why the Fed will have to hike rates uh, very soon in the future here, and keep an eye on this. Let's take a look at today, see how volatile it was. So you can see here it was way up here, had a spike up here a little bit, and then just kept coming down, 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 down. So this kind of gives you a better inclination as to the day, how it's been trading over the day here. Now let's bring this back here. Excuse me. And then we got the 10-year Treasury, also kind of going the inverse way, going collapsing and breaking above another technical level, approaching its 25. It hasn't approached 25 yet, but right now it's at about 1.54, and we're actually touching yesterday right around 142 range. Again, yeah, we were down about 142 yesterday, and now we're spiked all the way up to 1.54 due to the inflation news today. Now, on the national average for conforming limit rates, we got the 15 years now at 2.47, and the 30 years at 3.08. Now, these are with points built in. These are just the national average, and these are for conforming limits, and just kind of give you a gauge as to when if you're out shopping, that this might be kind of in there. There's a lot of variables that go into rates, so that's why you get some. When you're talking to other people, there may be discrepancies. There's could be the occupancy, it could be the type of property, it could do the amount of equity in the property or down payment, depending on if you're refinance or purchasing. Obviously, credit scores, different things like that. There's a lot of different variables that go into it, and again, this is what will drive the rates one way or another. They're still very low right now, but again, not as low as we saw earlier in the year, even last year, when they dipped down the twos and in some cases maybe high ones. All right, folks. I hope this is helpful. Hopefully you got something out of this. If you guys like the videos, please smash that like button, follow. We greatly appreciate it. You certainly help us out, and we appreciate you guys. And if you guys got questions, please reach out. We are here to help you guys as much as possible. So again, we look forward to see you guys in tomorrow's videos. And thanks so much for watching. Take care. Bye bye.